Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about quite a number of things happening in the markets, with a main focus on what happened last night, and that was during the FOMC press conference, the very first meeting of the Federal Open Market Committee in the US, which basically makes decisions for the US Central Bank, and this is their very first meeting for the year. So clearly, we all know that they decided to hold interest rates steady, but then further commentary from Jerome Powell, including avoiding major questions, led to a lot of volatility in the markets. And if you've been in the markets from yesterday in the evening till this morning, then you already know what happened. Clearly, there's a very strong rally currently happening in gold, silver, as well as platinum, copper, and other precious metals. So we'll be focusing on that. And as always, if you've joined, kindly say hi in the live comment section. And also remember that these sessions do not constitute of any form of investment advice. They are not a recommendation to trade, so you should always do your own due diligence. So we'll be starting with the economic calendar and review what happened as per last night. But before that, I need to update some people that the session is live. Perfect. I think that is done. So from the economic calendar, you can see that as per today, the 29th of January, 2 more days before the end of the year, and those days being one trading session, which will be Friday, the 30th of January, and one weekend day, which will be Saturday, the 31st of January. So last night is when we had the major news coming in. On one side, we had news coming in from Australia, where inflation year over year had moved higher to 3.8% compared to the prior reading of 3.4% and an expectation of 3.5%. So on the month, there was a 1% increase, which was way bigger than the expected 0.7%, clearly showing that inflation is on the rise again for the Australian economy, which makes it difficult for the central bank to keep cutting rates. Now they might even start considering going for rate hikes. So on the other hand, we had the Central Bank of Canada deciding to hold interest rates steady, but then giving a hint of a possible rate cut in the near future, also expressing a slight worry about the rate of inflation. So the main card or the main news of the day was the interest rate decision by the Federal Open Market Committee from the US. So despite holding interest rates steady at a range of between 3.5% and 3.75%, the FOMC basically hinted at challenges with unemployment rate. So the labor market is still facing some challenges and could be hiding some weaknesses. And at the same time, inflation report that we saw last week showed some improvement. So the Fed is not very much worried about inflation, but the job market data is quite concerning. So we'll be looking at a couple of articles from yesterday. Then from there, we'll try to understand what's happening. So the first article we'll be talking about was updated on Yahoo Finance. So Federal Reserve live coverage, Fed holds interest rates steady in first policy meeting of 2026 in a split decision. So they decided to hold at the range of 3.5 to 3.75% in its first meeting of the year, as widely expected. The decision was not unanimous, and two Federal Open Market Committee officials dissented. Remember, in the prior meeting, it was one member. Now we have two. So Federal Reserve Governors Stephen Mayran and Chris Waller, who are currently associated with support for Trump, voted to cut interest rates by 25 basis points. The Fed has signaled it will go meeting by meeting in 2026 to determine the policy path after the Fed cut interest rates in the prior 3 meetings. Divisions over the path for inflation and the labor market have dominated recent FOMC meetings, with officials in December voting against the Fed's 0.25% rate cut in both directions. So at the December meeting, officials projected just one interest rate cut in 2026. Meanwhile, questions over Fed independence loom over the January meeting and press conference. The Supreme Court had oral arguments in the case over President Trump's attempt to remove Fed Governor Lisa Cook from her role earlier this month, and Wednesday's announcement marked the first since the Justice Department's criminal investigation into Fed Chair Jerome Powell was disclosed. Trump is also expected to name his pick for Powell's successor to lead the central bank in the coming days. Of course, we know that the Jerome Powell's term comes to an end in the month of May this year. So, after the Fed meeting, what are the mortgage rate predictions for the next 5 years? So, how the Fed decision affects mortgage rates, this is different. It's not in our purview today. So the question is whether Jerome Powell will be the one cutting interest rates before his term ends in May, or whether it will be the successor to Jerome Powell who will be nominated by Trump in the coming days. So that's still a developing story. Trying to see if there's anything else we missed. So Fed Chair Powell offers 3 pieces of advice for his successor. On one, stay out of elected politics. Don't get pulled into elected politics. Don't do it. 2, another is that our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And third, the last thing is easy to criticize government institutions in so many ways. I will tell whoever it is that you're about to meet the most qualified group of people you not only have ever worked with, but you will ever work with. And when you meet Fed staff, and not everybody is perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed. So clearly, he's preparing for his exit. And there was a couple of questions that were raised on the meeting last night that he really tried to avoid. For instance, how much is AI responsible for a slowing US labor market? It's hard to say, according to Jay Powell. So when he says it's hard to say, he's basically avoiding the question. So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. So he didn't point out whether the AI sector and the investments in the AI sector, if they are impacting the job market. So tariff inflation expected to top out by mid-year. This is from Powell, meaning that the price increases that are happening in the US economy as a result of Trump's tariffs are bound to hit their maximum by mid-year, which means that after mid-year, that tariff inflation should be reducing towards the end of the year. So in the prior reading, the PCE price index, or the personal consumption expenditures, core inflation was rising at 2.8% year over year in both October and November. So while inflation has fallen over the past year, it remains above the Fed's long-run target of 2%. Though the Fed showed that they are in a good place, so they're expecting inflation to continue dropping towards 2% target. So on Fed independence, Powell said that we haven't lost it, meaning that they are still independent and Trump is not influencing the Fed, which brought even more confidence into the Fed. Yes, I'm strongly committed to that, and so are my colleagues. So Powell says there was broad support for holding rates steady, and he felt like the policy is loosely neutral or somewhat restrictive. which basically means that they are still practicing what we call restrictive policy. And restrictive policy is expected to drive inflation back to the 2% target. But then they could consider easing further if the job market keeps on weakening. So I believe that's summary of what happened as per last night. Of course, from Loretta Meister, Fed member, the labor market is likely the catalyst for the next rate cut. So as I mentioned, inflation is not a worry. The Fed is very confident. So the next likely rate cut would most likely come from worsening job market. So of course, the next set of non-farm payrolls will be very important to traders, and we will be focusing on them. So on other news, big tech earnings show big divergence. So normally you would expect to see big tech earnings moving in the same direction, but here we are seeing quite a divergence. So for instance, Nasdaq futures led gains 0.4% yesterday, while SP 500 added 0.3%, and the Dow Jones, which includes fewer tech companies, traded broadly flat after the major indices closed little changed on Wednesday. So Meta gained by as much as 10% in extended trading after issuing a quarterly revenue outlook that topped Wall Street estimates, even as it said its AI ambitions would fuel spending to as much as $105 billion capital expenditure. So Tesla gained around 2% after reporting quarterly results that exceeded expectations. So those are two big tech companies that made huge gains yesterday, with 10% on Facebook and 2% on Tesla. Meta is the mother company to Facebook and WhatsApp and IG. So Microsoft, on the other hand, lost by 5% as investors reacted to slower cloud growth during its fiscal second quarter and higher than anticipated capital spending and financial risk costs. So you can see how the market is reporting mixed earnings. Microsoft missing earnings, but then Meta and Tesla doing way better. So I will be following up closely on more news coming up. For instance, we'll be looking at Apple first quarter earnings, which are due after last day's closing bell. That is today at 11 p.m. MasterCard will also be reporting, American Express, as well as Verizon. So still on the share side, there's quite a good number of companies that are showing some promise and others basically facing a lot of challenges. So on the luxury goods side, especially in France, there's a company called LVMH, Louis Vuitton, Moet and Hennessy. The stock is down over 5% today and largely over 15% since the year started. So in the very first month of trading, the stock is down 15%, worth checking it out. This is after revenue drop for 2025 financial year. So you might want to check on that and see why LVMH is dropping. On the other hand, among companies rising includes Micron Technology. Micron Technology is a US company which produces computer memory and computer data storage, including dynamic random access memory or RAM, flash memory, and solid state drives. So clearly, we know that there is a shortage of memory devices across the world, and one of the companies that benefited the most from this, especially last year, was a company called SanDisk, which made some good returns. So if you look at the performance of Micron in the last 1 year, it's up over 389.02%. And year to date, that is since the year started, it's up 38%. And of course, in the last 1 day, it managed to gain by 6%. And of course, in aftermarket trading, it gained by a further 1.77%. So we'll be expecting the stock to open with a gap and start trading at $443 per share. So on the other hand, Micron stock is doing really well. Sorry, not Micron, SanDisk. So at the beginning of the year, I remember doing an article on SanDisk. I believe I can find the article on my X profile. So if you go to my X profile, you check articles. I believe the only article I have is about SanDisk. So I did this on the 7th of January, right after we resumed the snapshots. So I'll be sharing a link with you guys. That should be in the comment section. So you might want to add this stock to your watch list and see how it performs over the year. So I've sent the link. So back to SanDisk. So far, year to date, since the year started, we are just on the first month of the year. The stock is up 91.70%. And of course, if you look at yesterday's performance, it was up 9.6% with a further 2.93% gains in after hours trading. So this remains one of the hottest stocks in the US stock market. And of course, we'll be expecting further performance from the stock, clearly based on what we are seeing happening in the memory sector. So you can see how some of these other companies in the same sector performed. Micron up 6%. Western Digital, also a manufacturer of hard disk and flash drives, was also up 10.7% yesterday. And of course, for quarter 1 2026, earnings per share beat was 96.89% for SanDisk, and revenue beat was up 7.38%. So clearly, a company that is making some major news. So other than that, I believe today we started with a lot of things. So key highlights from trading economics: flight to metals continues. This is mainly concerning gold, silver, and copper hitting record highs. Turkish jobless rate lowest since 2005. European market set for higher open. Japan consumer morale highest in 21 months. Fed pauses rate cuts. Philippines GDP growth misses expectations, and oil rises on US threats to Iran. So noticing some of these highlights, I'd like to shift real fast to the energy sector, and you can see the monthly performance of some of these energy products. For instance, UK gas and TTF gas are up over 33 and 36% consecutively, and this is within the last 1 month. So this is quite a performance, with crude oil up 10%, Brent crude oil up 13%, gasoline 10%, heating oil 19%. So clearing on the commodities side, oil is doing really well with an average of 10% plus since the year started. So on the metals side, this is where the madness is. Year-to-date performance, notice how gold is up 28%. Earlier this morning, it had hit 30%. Remember the whole of last year, gold was up 60%. And just the first month of this year, it's already up 28, close to 30%. Silver was up 149% last year, and now it's already up 65%. So this is quite a wild performance. And copper is up 10% year to date. And this is quite a huge performance. Then we have lithium being up 41%, platinum being up 31% since the year started. And now when you compare this with the performance for the day, you notice that some of these assets are moving faster than others. For instance, copper is the biggest gainer among these metallic commodities, being up 6.3%. Gold is up 2%. Lithium is slightly down 2.33%, but platinum is up 3.39%. Silicon is up 2.19%. So quite a crazy commodities market, and I believe that's where a lot of traders are concentrating their trades as per this month and this week. So on other news, WTI crude oil futures rose above $64 per barrel on Thursday, advancing for that side session to levels not seen since late September, after US warnings of potential military action if Iran does not reach a nuclear agreement, heightened concerns over supply disruptions. So President Donald Trump said a large US naval force in the region stands ready to act with speed and violence if necessary, adding to the worries that conflict could disrupt gold shipments from the Middle East, a region responsible for roughly 1/3 of global supply of oil. So potential Iranian retaliation could also target shipping through the Strait of Hormuz, a key choke point for oil and LNG cargoes. Iran says it is open to dialogue, but wants of an unprecedented response if provoked, while stepping up diplomacy with regional powers to avert further conflict. Elsewhere, the US dollar fell to its lowest in nearly 4 years, making dollar-denominated commodities more attractive to buyers. So, of course, we know that Trump has been issuing threats, especially throughout last year. But then, considering what he did in Venezuela and grabbing Maduro right from his castle, when he makes a further threat to Iran, investors are now paying more attention, and those worries are driving crude oil prices higher. So, in other markets, United States federal funds interest rate was held yesterday. So, after having 3, 4, 5, 6 rate cuts, it seems like we are stuck around this level for a while at around 3.75%. So this was in line with expectations. Of course, the two members who voted for rate cuts were the big surprises. So the central bank also reinforced that it will carefully assess incoming data, the evolving outlook and the balance of risks when considering the next adjustments to the federal funds rate. During the regular press conference, Jerome Powell said the US economy is coming into 2026 on a firm footing and that interest rates right now are appropriate to promote progress towards both of the Fed's goals. Of course, we know that the Fed's goals are to maintain full employment and inflation at a target of 2%. So other than that, on the currency side, trying to balance all this. So the currency side, the dollar has been the weakest currency for the day, with the Australian dollar being the strongest, up 0.45% against the USD for the day. Then month to date, that is since the year started, the Australian dollar and New Zealand dollar still remain the strongest currencies year to date, with the Australian dollar up almost 6% against the dollar, New Zealand dollar 5.63% against the dollar, and most of these gains have happened within the last 5 trading sessions. So clearly, the two currencies are doing really well against the USD. The Swiss franc still performing quite well, considering it was the strongest currency among the majors as per last year. So now it's up 3.57% against USD. Pound 2.89%. Of course, the yen showed a big spike in the last couple of days. I'm saying the last 4 days. Now it's up 2.39% against the USD. The euro 2.05% against the dollar, and the Canadian dollar is the one that has the smallest gains against the USD, up 1.46%. So on the Bitcoin side, not looking good. So year to date, it's a slight 0.52% gain against the USD, and down 13% in the last year. So looking at other markets or other highlights, Australian dollar hits a fresh 3-year peak. That is a 3-year high against the dollar. And the Kiwi, that is the New Zealand dollar, rises to a 7-month top against the USD. Of course, we have seen they are the two strongest currencies in the market as of today. And of course, there is also the noticing that gold volatility explodes as price is now trading like a meme stock. So it's not every day that you see gold trading by 100, the following day it trades by $200 and so on. So it's increased volatility, which comes with both increased opportunity as well as increased risks. So that being said, I don't know if you guys can see my screen. I was getting a notification that I had lost my connection for a second. So kindly respond on the comment section. So I'm done with the updates happening in the markets. So now I believe it's time we start looking at some technical analysis and try to understand where these charts may be headed going forward. Trying to maximize the screen. So this is the MetaTrader 5 trading application. It's the app that we use for trading on a desktop or a laptop. If you prefer using a mobile app, search for equity trader by FXPesa on your Google Play Store or Apple App Store. Once you find the app, it's free of charge. Download, install, sign up, and begin practicing with a demo account. So I've sent the name of the app on the comment section. So checking on the comments here, you can see Matilda is in the house. Good morning. Simon is in the house. Good morning. Limo KV, Richie, Miss D Trader, John Saika, good morning. Samin Jadi, Robert Cavale, John Kamau, good morning. There's a good request to check on USD JPY analysis. Definitely we'll check on that. What does Trump mean by a weaker dollar being good? Is it about competition in US exports? When the dollar is weak and he's trying to make America great again, it basically means that US products become cheaper to the rest of the world. So whenever you see the dollar weakening, down 10% over the last year, this year is almost down 6%. Then it means that other currencies are gaining against the dollar. So you need less of other currencies to buy the same amount of dollars. And as a result, it means that US products become cheaper to the rest of the world. So this is promoting US companies. So you'll notice that Japan and China have been doing the same for decades and decades, where they maintain a weak currency, and this makes their products cheap, and the rest of the world keeps buying from them. And that's basically how China and India have managed to pull out of companies to their countries, where they keep on producing cheaper and selling more to the rest of the world. So you can see Odiwa in the house, Charles Palmer is in the house, Omalwa, thank you for joining. There's also a question to check on our USD, and of course, thank you for your response, Wisdom Vault. Good comment here. I have registered now, but my MT5 live account is not working. Kindly inbox or go to FXPesa.com website and then hit the live chat, or simply email support@fxpesa.com. And of course, you will get a very quick response, especially if you do it now. But before you do that, let's first of all complete today's session, where we now dive into technical analysis. So this is a hybrid copper futures, and as you can see, today's performance has been, I would call it stellar, way better than expected, up 5.23%. So we covered this, I believe last week we were covering this pullback here, where we had the first pullback, market rallied and then dropped again to retest the same area. And as you can see, the point that the market bounced from was almost the same exact price. And after we got there, there was a straight up jump, a pullback, and then a continuation. So high-grade copper futures remain one of the most bullish assets in the market as commodities continue to rally across board. So here you can see that as we got into 2026, should be here on the 1st of January, the copper futures are up over 10%. So platinum is also quite a big gainer since the year started. Believe the year started when the price was around here. Yes, this is a gain of 34%. And of course, after the pullback that we saw earlier in the week, yesterday and today, yesterday's evening price performance and today show a continued recovery from earlier in the week sell-off. So here we're looking at a potential pullback that would potentially retest this area here, and then a bounce from this area, moving towards the previous high. And the justification here, we are looking at yesterday's session highs, which then coincide with what price is retesting now. So that's it for high-grade copper futures as well as platinum. And now we look at the main topic of the day, which is gold and silver. Gold managed to move like a meme coin yesterday. So right from the opening price to the closing price, it was up by $239, and this is up 4.63%. Then after Powell's speech, it continued gaining and jumped by 3.3%, or basically by $179 before pulling backwards. So if you go to a smaller time frame, such as a 5-minute chart, we know that these pullbacks have been happening. They might look short on the chart, but if you measure the number of pips, you know that this is quite scary. A pullback of 15,489 points, or basically 1,548 pips. This is huge, or 2.7% drop from session high. So this was the session high during the Asian session, and the session low we approached the Tokyo session. Then we jumped even higher during the London session. This was the high we had, and the London session is seemingly bearish. So now we can see gold moving further back downwards, but within the range of this morning session. So the range means the high and the low of that session, and we are still trading within. So clearing this being the 5 minutes, and now this being the 15 minutes, you can see the sustained pressure as investors take some profit, and gold makes some steps backwards. So perhaps we should be seeing some further downward momentum happening in gold. Of course, key level test would be on this area here. Whether we manage to break below that area here, and if we have a break, then we will be going for 5,444. And of course, if you have a bounce, we go back to the previous to the day's high. So it's a key level of observation for gold trading today. So on the silver side, we are seeing something similar. A very strong rally that goes to a new all-time high earlier in the day at $120.418 per ounce of silver, and then a very sharp drop. And this sharp drop is looking to test the day's low. And if you look at yesterday's early morning session high, it managed to hit 116.102 before pulling back, and then eventually breaking after Powell's speech in the evening. So now, if you're going to retest yesterday's session high, then the idea is that silver drops to 116.102, and then from here we observe whether there is a breach. A breach would mean we move even lower to 115.151, or we see evidence of buyers coming in and we start trading back upwards. So it's a wait and see kind of scenario. Then we have US equity indices. Of course, we know that for the last 3 weeks, they've been consolidating, 3 months. So for the NASDAQ, notice how after the session high that we saw in the month of October last year, we haven't seen a new high. So if you compare the sequence of highs and lows, we just broke towards the upper side in the last 2 days, and now the market is looking to move even higher. So after breaking higher and pulling back and continuing from the 1 hour time frame, you can see that there was the first retest, a second pullback, and now a continuation, which implies that the Nasdaq could be headed into a new all-time high. And the all-time high is 26,249, and today we are trading very close to that. So most likely that we retest at least today and potentially break towards the upper side. So on the US 500 side, you go to the daily time frame, you'll notice that there's been consistent pressure to break into new all-time highs. So yesterday's highest price was a new all-time high, above 7,000. So we go to $7,013 per share. And then once we go to that, immediately the market pulled back. There was some form of profit taking. The pullback was not without volatility, because this could be taken a very sharp drop, almost 1% within a single trading session. But then today we picked up pretty well. And for the last 6 consecutive hours, there has been bullish momentum on the SP 500. And more momentum is expected for the day, looking to retest a new all-time high. And that new all-time high would be prices above $7,013 per share. So clearly, for today, we expect more bullish momentum. So for the Hang Seng, we are looking at a 5-year high. That 5-year high has been hit, and this is the 4th consecutive day of bullish momentum, and each candlestick is getting taller and taller, indicating the momentum in Hong Kong shares. So after the strong momentum earlier this morning, notice how the market managed to top here. So after we breached, yesterday. So today we breached the same high that we saw yesterday got a pullback here, and now we are looking at a potential continuation and a retest of the previous high. So most likely we see the market heading to retest yesterday's high as it keeps pushing higher and higher. So for the UK 100 index, it's a 2-week consolidation. So 2-week consolidation means that the market has not been moving up or down. It's basically moving sideways, and volatility seems to be reducing over time. So from the daily time frame, from the 4-hour time frame, you can see that the market is bound within this triangle. And in the last 8 hours, you can notice that there has been a very consistent push towards the upper side. So the idea now is to observe this area here to see if there is a break or a reversal. So a reversal would mean we head straight back to the lower trend line, but then a break would mean that we move towards the top of the pattern, which is a target of 10,258 price level, which marks the top here. So Nikkei 225 index, same stuff. We are looking at a 3-week consolidation, an attempt to break, which failed. This was just past midnight. Then the market dropped sharply, which means that now we have entered a cycle where we are no longer moving this way. Now we are basically moving this way towards the lower trend line as we continue trading within this consolidation. We don't have a break yet. So on the USD JPY side, and I know there was a request for this, there was this sharp drop that was very suspect, almost looking that the Bank of Japan was intervening in the market, where the yen gained by 4.47% against the USD. And this was within a space of 3 sessions. So here we're looking at Friday, Monday, Tuesday. Then on Wednesday, the market starts recovering. And today being Thursday, we are seeing some more recovery as the dollar regains some momentum from the yen. So perhaps this will be a very interesting area if the market is going for this recovery, because this area was acting as a bottom and now could be serving as a top. So as the market pushes to recover some of the losses it experienced over the last couple of days, so a nice target would be 154.368. So dollar trading against the Swiss franc. Here we can see the dollar really attempting to regain some ground against the Swiss franc. But then the idea is still very bearish. And you can see even when we have consolidation such as this, I'll show you this one. This was more of a sideways momentum, or what we call a range, which lasted about 1.5 days. Eventually, we had a very sharp drop, and the market hasn't been able to reclaim that area. So despite yesterday's bullish momentum, today there has been an attempt to move even lower. So any attempts to move higher will be met with more bearish momentum. Of course, now we start connecting the highs and clearing. It might make sense to be observing this chart here, hoping for a potential entry point that pushes us even further back downwards. So you look at Euro USD with some serious gains happening over the last couple of sessions. So notice the green candlesticks. So 1, 2, 3, 4, 5, 6, 7. So in a span of 7 trading sessions, only one was red. And within those 7 sessions, the euro was able to gain by 4.32% against the USD. Yesterday erased some of those gains, and today you can see that there is an attempt to give back some of the gains again, considering that a 4% gain in the dollar against the euro, in the euro against the dollar, is usually considered a very big gap, especially considering that euro is the most traded currency in the eurozone, right after the dollar. And now, after an attempt to move higher, was met with resistance here. So we could be seeing the market going for the low of day. So the volatility is very much reduced. It's not like the volatility we were seeing yesterday. So I wouldn't be very optimistic of a very big move compared to what we saw in the last 2 days. So look at pound USD, despite having made a very strong rally on Tuesday, yesterday dropping, and today attempting to move higher. There's already signs that the market has lost momentum, and having met yesterday's high, you can see bears coming in, and this was yesterday's high. So the market got to that area, played there several times, and still has been unable to break, which implies that we could be headed much lower. perhaps back to the Asian session low. So here we are looking at the dollar gaining some pips against the pound and moving back to the Asian session low. So AUD/USD are still one of the strongest currencies in the market today. This is the Asian session low. So of course, today what we are seeing is the dollar gaining some strength. So the idea is to see what happens if the market gets here and we don't want to short the AUD/USD. We want to be looking for bullish opportunities, especially bounces after pullbacks. So I don't know if I have covered everything. Other European equity indices, there's the New Zealand USD pair, also very similar with USD. So clearly, there's some form of pullback, looking to retest yesterday's high. Sorry for that. So this was yesterday's high, and of course, the prior day's high is here, not very far off. So I want to see what happens within these two trend lines. Yesterday's high and Tuesday's high. So within this area here, and see if there will be buyers coming in and look to trade in the bullish direction. So the German DAX, despite attempting to make a very strong recovery in the last 2 weeks, seems to be weakening, has just tested a key level support. This is the low of the week, clearly broken. So Monday, Tuesday, Wednesday, Thursday, the low of the week has been broken, and it seems that the market is accelerating lower, which means that now we have two targets, this low here and the low of last week. So potentially, we should be looking at the market extending the drop to 24,505. And of course, if this is broken, then further back downwards. So the EU stock market index shows very strong recovery, despite there being very many candlesticks. It's a bit noisy. But then from what we are seeing happening with other equity indices from the Eurozone, there seems to be some form of weakness playing out, especially if you consider this zone here. This was a key level support and now could be turned into a resistance. And if the market is unable to breach and move higher, then it could be moving further back downwards to retest the previous lows. So the French stock market index here opened with a gap, continued to rally until it completed this particular move here. So notice that this was a sharp drop yesterday. So a recovery with the gap here. And now that we have covered the full recovery from yesterday, perhaps it's time for the market to go for that gap and fill it within the next set of hours. So that could be in play. The Swiss stock market index seems to have bounced from the lower trend line. So remember what we've been saying, the dip is a gift. Then the only market that seems to be presenting a gift is the Swiss 20 stock market index, which seems to be finding some ground around this area here after the sharp drop that lasted a couple of weeks. And now you can see there is some form of evidence of buyers coming in. So the evidence I'm talking about is the sequence of green candlesticks happening here. And this is right from yesterday's low, which implies that the market could be on a rally. So while it may not recover all the way up, short-term targets could be along these lines here, where the market now starts showing some strength and pushing towards this particular upper trend line. So the Netherlands stock market index, after the sharp fall yesterday, which closed the opening gap, notice that the prior gaps here are closed. The gap up was closed with a gap down, and here the gap up was closed by a momentum down. And now we are seeing a market that is really pushing higher. So from this perspective, you can tell that from the forward time frame, the market is looking to accelerate even higher. So we talked about this 3 weeks ago, looking at the market recovering from these areas, getting to previous highs. And from the daily time frame, you can see that the market is looking to achieve yet a new all-time high. So I believe we've covered everything we needed to cover for the day. USD CAD, we mentioned that the Canadian dollar seems to be the weakest currency in the market against the dollar. So if the dollar is recovering today, then it's best to pair it with the weakest currency and that seems to be the Canadian dollar. So more start looking for chances to buy in this market. We don't have that yet. So from the daily time frame, this is how it looks like. So yes, there was a key level support. Seems like the market is attempting to break. But then if we see evidence of buyers coming in, this might be a very interesting market to be looking for buy opportunities. So I just cleaned up the chart. I removed my prior plot of trend lines. So from the 4-hour time frame and 1-hour time frame, this is how it looks like. So clearing a very sharp drop, 2 consecutive weeks of bearish momentum, and now a key level target would most likely be the prior low now turned from support to resistance. So here I would be observing if buyers are coming in and look to buy and trade towards the previous bottom, now turned into a resistance. That's around 1.36413. So that is it for the day. Thank you very much, everyone. Thank you for your time. Thank you for sharing this session. And of course, I hope to see you on the next session. So before you go, kuna chai, hi Manchester United fans, hi Chelsea fans. Also, we saw Arsenal pull in some quick win yesterday, same thing as Liverpool. So the guys who are depressed over the weekend, I believe they have recovered now. So for those who are new, you should know that these sessions happen every day from Monday through to Friday at 11 a.m. So make sure that you subscribe to the YouTube channel, set notifications on. So whenever there's a live session happening, you will be notified and you will be able to attend and benefit from the knowledge we share. Seeing there's more questions coming up. USD has been pretty weak of late. Going forward, should we expect it to recover relatively? Again, gold has an unfilled gap which is pretty far lower from the current price. What will trigger filling it? Well, I'm not very optimistic of gold filling that gap, but on the question about the US dollar strength weakness, yes, the dollar has been pretty weak. Trump has mentioned he's not concerned. He said it's good for the economy. So there's no pressure from Trump's camp, which basically means that he's willing to let the dollar fight by itself. So the dollar doesn't weaken for too long. So eventually there's a global demand for the dollar. So when it's cheap, a lot of investors buy it and then use the dollars to buy dollar-denominated assets. So at some point, we should be seeing some recovery, like what we are seeing today. So while it may not continue to weaken in a straight line, for instance, you don't expect to see the dollar index going to, let's say, into the 80s. Maybe it might drop to the 90 price level, but not to the 80s. But in between, there will be days when the dollar will be positive, and even those recoveries are tradable. Remember, for us as traders, we are not interested in the value of a particular asset. Traders are mostly focused on the direction of momentum or direction of price. Yes, it hits all over the market, except for crypto. Cryptocurrency markets are not facing 80 hits, though we remain patient, especially for Bitcoin investors. Good morning, Trump FX. Thank you very much, everyone. And of course, remember to check out the latest episode of the British Banter podcast. We covered quite a number of topics, including Forex, crypto, and indices. Dive right in. For those who attended our session last year, where we basically had a debate on which one is easier to trade, Forex, crypto, and indices. The episode is out, released 5 days ago. This week, we'll be having a new episode coming up. Make sure to check it out. And if you haven't joined the Telegram community yet, make sure to join. I'll be dropping a link in the comment section so that you can join and be part of the wider Bullish Banter community, where we continue these conversations and updates on what is happening in the markets. So we'll be posting this link here. Once we do this, then our session is over for the day. Thank you very much, everyone. I hope to see you on the next session.